And we don't have to tell you that the recent trade war fears over the past week have created some wild swings in the market. So what does a retail investor do about all of this with their portfolio? Back with us tonight, J.J. Kinahan, the Chief Market Strategist at TD Ameritrade. Always good to see you, J.J.
Hello,
so usually when the market hits a rough patch, the smart money says, don't overreact, this too shall pass. But more voices recently on Wall Street have been saying this may not pass for a while. So what's an investor to do with this?
Well, it is interesting, Bill. If we look at our clients' activity over the last couple of months, I would agree, first of all, don't panic. But one of the things we've seen is our clients pare back on equities and go more towards fixed income. So they've been net buyers of product, but they've actually been net sellers of equities 2 months in a row. And the stock that's actually leading the way, Bill, maybe to your surprise, is Apple. And then we have Facebook and Amazon. So the FANG stocks have certainly gone from so in vogue a year ago to ones where I think people are taking some profits right now. And as I say, going into fixed income, but they're going into short duration fixed income, most of it under 6 months. Because to your point, I think a lot of people think this will last at least through the end of the year, but they want to have money ready if this is settled. They're not taking off all their investments, but they're certainly paring back some risk where they see some existing.
And are you hearing from your clients, and would you recommend to our viewers who have a long-term time horizon perhaps to put up a list, make a list of the stocks that you've always wanted to add to your portfolio, but perhaps they've been too expensive?
Yeah, I think, Sue, that's a great point. First of all, yes, we have heard from our clients, but I think it's more, at the top of the show, Bob did a great piece explaining about, what this sort of means in terms of a devaluation. And most of our clients just explained to me what this actually means. So it hasn't been a panic phone call, which I think is great. It's people just trying to understand. To your point, Sue, if you look at our mix at TD Ameritrade, we have a lot of clients who are shorter term traders. We trade a lot of derivatives. They love this when there's volatility. But to the longer term traders, many of whom are watching your show right now, what I would say is absolutely look at stocks you want to own. Don't make the mistake, though, of going all in at this time, so to speak. There may be other opportunities. Maybe you buy a portion of a stock that you've really had your eye on for a while. Stocks have come off a bit. That gives you some opportunity. But the one message I think to really take away from what we are seeing is this has lasted a lot longer than people think. And there's no reason to believe that the end is near, so to speak. This may be a prolonged cycle. So no matter what you do, we're just finishing earnings season, looking at the earnings, what are the companies that you want to buy saying about this, or are they largely avoiding it? Because this is the largest issue we have right now in the market.
J.J. Kinahan with TD Ameritrade. Again, thanks for joining us tonight, J.J.
Always a pleasure. Thanks, guys.